Hey everyone, and welcome to the Your Money Your Life podcast. We're at episode 244 of the podcast. Before we get into the episode, make sure you like, subscribe, five-star rate, and review the pod wherever you're listening. We do this every week, so make sure you share it with your family and friends. Let's dive into our market update of the week. First and foremost, we'll get into our market update. The big thing here is what's pretty much going on. We've talked about inflation, we've talked about the Fed's moves. So now it's continuing to watch what happened to the economy, continuing to take stock on what's happened with earnings. Those are the biggest things. It's quite a quiet time. Summer, if you think about the market historically, we don't always go based on historical data as far as month to month or what happens each month, because that's not super accurate, but sometimes you can see some trends there. But the summer is usually not that great of a time for the market, while the fall, fourth quarter is usually a better time. So if you think about that scenario as we going into the fourth quarter, that's something to take stock in. But weekly jobless claims came in slightly higher than economists polled by the Dow Jones. So if you remember, we did a half basis point reduction from the Fed. That was pretty much saying, hey, they're pretty much saying we might have taken too long to start lowering rates and we're going to be more punitive. We're going to take much harsher action, a more dovish view, take a more dovish lean versus quarter point move, right? And so that's what they did. That's largely driven by revisions in job growth, right? Revisions in job growth got revised way lower, which was essentially saying the economy is a lot slower than we anticipated or what the data was initially showing. And so we need to be much more proactive in our movement. And so that's what happened with the Fed lowering half a basis. But you've probably already gotten an email from your savings account, your high yield savings, or from whatever high yield savings function or bank or institution you're using, saying that, oh, hey, your savings rate is about to change because it's closely tied to what the Fed does. You might see the same thing in your mortgage rate. You might see the same thing in all those areas, besides, of course, credit card rates, which stay sticky highs. So that's one thing to note. We have geopolitical risks, also coming down the pipeline. That's something to watch as, right now we have things going on in different areas of the world. So there are, oil prices are being driven higher by a lot of those geopolitical risks you see. So that's one thing. Other than that, it's been a quiet week on the markets. If you see some of the moves some of the big institutions are doing, Berkshire Hathaway, of course, Warren Buffett, he dumped more Bank of America shares. He still has a 10.2% stake, but he sold another big chunk of Bank of America, and his conglomerate dumped more than 8.5 million shares. That's worth 338 million, and that's according to a new regulatory filing. So that's one thing. Watching what the big guys are doing is something to always keep a note. Again, we talked about jobless claims. The forecast jobless claims rose more than forecasted last week. Initial filings for unemployment benefits nudged higher last week and were a bit above expectations. This is from the Labor Department. The first times claims totaled 225,000 for the week ended September 28th, up 6,000 from the upwardly revised previous total and higher than the 220,000 consensus estimate from Dow Jones. So again, the job market is starting to squeeze a little bit, starting to tighten. It's not as loose and free and easy as it was before. And so that is going to play a part into how the Fed makes moves. If you look in the video, um, they're still flying high. The stock is still moving incredibly, at an incredible pace. Let's see what they're doing year to date. The stock has moved pretty handedly, right? From about $47 a share up to about 124%. So stock is still moving crazy. They said they're the demand for their new next generation AI graphics processor known as Blackwell. He was CEO Jensen Hung was on CNBC and said the demand for it is insane. The stock is still moving pretty handedly there. So that's something to note for NVIDIA. Let's move forward and look at the chart. Let's look at the chart. 1 month, again, we're seeing a little bit up above a little bit over a percent on a 5-day chart. Again, we're about down 1%. And again, if you look at year to date from the beginning of the year, the market up about 20%. That's the S&P 500. You look at different areas like NASDAQ and Dow, you'll see different numbers, NASDAQ being slightly higher there. So that's the big thing on the markets. Let's jump into some current news and updates of the week. So we talked a few weeks ago about the NFL being allowing private equity to come in to the league, right? Like the NFL is one of the leagues that doesn't allow for um, private venture funds, private funds to own part of NFL teams, right? It's all family businesses that were passed on or sold to another family business, and they have to owners have to vote on if someone can even buy into or buy a team, even if they have the capital. So it's a very tightly knit and tightly wound process that's restricted only to um, family businesses. And now they said NFL said, hey, we're going to probably allow slight minority ownership in of private funds in NFL teams. And so Miami Dolphins owner Stephen Ross, he's in advanced talks to sell a stake in the team to a private equity firm's Aris Management and Alibaba chairman Joe Tsai. This is from the Bloomberg report. It should it go through, the deal would be the first instance of a private equity ownership in the NFL after the league approved institutional investment in teams over the summer. According to Bloomberg, Aris is in discussion to purchase 10% of the share of the Dolphins and other Ross-owned assets. And Joe is eyeing a 3% share. So that's big news. This will be the first private equity um, entrance into the NFL, and this new P rule, it's a substantial scale stake to Ares Capital. The value of its parent is 8.1 billion. Well, so yeah, this is really interesting. You're going to see this more and more with private equity funds looking to get into what is the NFL business, which is a very lucrative business. Owning the team is a very lucrative thing to do, and private equity, of course, wants into that atmosphere. So we'll see that going more and more, and we'll keep watching and tracking those things as they occur. I saw this, and it's obviously way off of what do we normally report on, but it said there was a report that said 1 in 4 lawyers are bullied at work. Almost a quarter of lawyers experience workplace bullying in the last year, according to a survey of 6,000 attorneys conducted in Illinois. The report found that 38% of female lawyers recorded bullying compared to 15% of males. Responses diverged among generational lines. 39% of lawyers aged 25 to 35 reported bullying, but the figure dropped to 12% for those aged 66 to 75. Higher rates were seen among racial minorities and those that identified as LGBTQ plus. Okay, so this is bad news that people are being bullied at work. You never want to see that. And it's just the workplace environments can be toxic, some more than others, but they're never good, and it's just a thing that you don't want to see. So I thought it was interesting. How do you handle that if you're being bullied at work? It's really hard because there's hierarchy, there's political relationships, there's your livelihood, and all these different things that take a place, and then you're getting bullied at work, and then it affects your work, and all these different things. So that's so interesting to see. I wonder if you've experienced that out there, and how you've handled it. Did you leave jobs? Did you confront your bully? Confronting your bully, I think, is the best way to go, right? Right. But that's an interesting survey because lawyers are doing better as far as big law, as far as salary and different things. But a lot of those things comes with stipulations that come with strings attached, right? People get nastier the higher up you go. So, thing to note: just keep your mental health awareness on point. The ex WeWork boss has a new project. So the man behind WeWork, I loved that documentary. It was an interesting documentary. I don't know if I loved it, but the documentary, it's on Hulu about WeWork, Adam Newman, co-founder of WeWork, and now he's launching another project. The new firm is aimed at more of a mature crowd and will offer co-working spaces for residents as well as private offices to rent in buildings under Newman's real estate company. Flow, Newman's Miami-based startup, was recently valued at more than 1 billion, while WeWork recently exited Chapter 11. Okay, so the man behind WeWork is now set up its competitor, Workflow. So the company's Workflow, and it's the new concept is dubbed Workflow, is part of Flow, the residential property firm Newman founded in 2022, with the backing of Andreessen Horowitz. Flow is also launching sale of its first condo project in Miami. So he has a new conglomerate or new parent company, Flow, and underneath Flow, he's launching a WeWork competitor called Workflow. Um, this dude loves real estate. This dude won't quit. You have to give him props. He just keeps going, keeps coming, keeps selling. And I don't really understand what workflow is. What is that? do. They say it's rather than 20 somethings running amok, the new firm is aimed at a more mature crowd. Okay, so they're aiming at a more mature crowd that works from home or works for themselves and will offer co-working spaces for residents as well as private offices to rent in buildings under Newman's real estate company. So he has a bunch of real estate holdings and companies and buildings, and he's going to allow people to rent it, but it's not going to be for the young, hip, 20 something WeWork crowd. It's going to be for the older, mature crowd. Does that make sense? I don't even know. That just doesn't sound like it makes the most sense, but we'll see how it works out. Tesla reported earnings, and they had rebounding sales, but they missed on some estimates last quarter. They delivered over 462,000 vehicles on the period ending September 3rd. That was below analyst estimates, but it was an increase of 6.4% from the year prior. But the stock is has been one that's been, volatile, and what really people are looking to see if they could keep up with production, keep demand high, and make sure that all the projects that they're looking to launch, which are pretty ambitious projects, especially under Elon Musk's conglomerates, actually go through. So we'll see. They told us that there was in Q3 2022 there was some stoppages for factories, but it looks like that has kind of whittled through, and now they're just looking to continue to keep up with demand if there is demand, especially in this environment where the consumer is in a lot different period than they were 1 or 2 years ago. So that's something to keep your eyes on. In more news, I did see something that was something we definitely need to talk about: the Port Authority port strike problems. So dock workers, if you haven't heard about this, are going on a historic strike. They're halting trade at America's busiest shipping port. So I had to dig more into this and understand a little bit more. But of course, as you know, a lot of the things that we get here are shipped, over the seas, over water, over Gulf Coast. But now, and there's people that do these unpackaging, then get everything in and get it in your truck that gets it shipped to you. All those different things that happen. But there's nearly 50,000 dock workers at East and Gulf Coast ports that took to the picket line, meaning took to strike, and their strike began after the workers' union rejected a last-minute wage hike offered by employers. It's the first strike by Eastern Gulf Coast port workers since 1977, and it's a massive one. The stoppage could cost the economy $5 billion a day and disrupt nearly half of all U.S. imports. Shortages could lead to higher price for food, toys, and clothes, and cars. So this is another supply chain issue-ish kind of. They're going on strike because they want higher pay, they want different things, and they're saying that we're really going to not allow. We're going to have people going to struggle to get food, toys, clothes, cars, and the union is saying they want a 77% wage hike over 6 years, stronger benefits, and yesterday, the administration, President Biden, urged both sides to negotiate and end the strike. But he also said he would enforce the Taft-Hartley Act to keep port workers on the job. Okay, I want to interesting and look more about the Taft-Hartley Act. I'm assuming that was an act put in to force people to stay on the job instead of striking. So, half of North America's busiest ports are affected, including the port of New York and New Jersey, the third largest by cargo volume. So this stoppage could be a supply chain nightmare. Again, this is a supply chain issue, which was one of the big reasons why we saw inflation outside of course, a lot of influx of funds and influx of money into the economy, supply of money. There was supply chain issues which caused inflation last time also, right? And so it's a cocktail of bad problems there. Economists say that if the halt continues for more than a few weeks, consumers could see higher prices as the holiday shipping season ramps up. That is very important. You probably would see that with the holiday season ramping up. Sidewalk bots will pass food delivery to drones as the autonomy economy revs up. Automation's a thing, folks. Automation is one thing that was talked about in the Port Authority strike is they're bringing in automated, obviously automation into the equation, and it's taking people out of jobs, and so companies are going to do a lot more automating with all these different technology advancements. You're going to see that more and more in line items, and people that are looked at as line items with the companies are going to be effectively removed, right? And so that's something to take note going forward. Is there anything else for us to speak on new updates? There wasn't, that's a lot that we went through. There wasn't much more. let's dive into something that we love to dive into, which is our question of the week. So, question of the week: what is the average amount of student debt for 2020? What is the average amount of student debt for college graduates? The average amount of student debt for college graduates, and the average is 37,000. Note that that 2024 is only the first 2 quarters of the year. And so yeah, that's 37,000. So the question, this numbers come from Education Data Initiative, and they looked at the debt to income ratio of a new graduate. They adjusted this for inflation. So the current student loan debt at graduation is estimated to be 37,000. Despite the rising cost of tuition, graduates who have been out of school for years often owe more than new graduates due to interest rates. Interesting. Well, that's folks. That's just why we have a debt paydown plan, and you have to make sure that you're following that. We've worked with a lot of people for debt paydown plans, especially for student loans. What is the average ticket price for this year's top concerts? Interesting. I say a couple $100. The average is $122. So the average ticket price for top concerts is $122. Have you gone to a concert this year? I actually went to the Usher concert. Those of you know, Usher is my favorite artist of all time. The concert was wonderful. We had incredible seats. Loved it. Um, I'm not a big concert guy, but I will definitely keep going to concerts if it's an artist I really, really enjoy, and if I have in a wonderful seat that I have to be in. I can't be bugged, can't be around too many people. Folks, we do this every week. That is the Your Money Your Life podcast this week, episode 244. Make sure you tune in every week and follow us. If you are someone that needs help, make sure you reach out to us and we'll talk soon.